In this video, we're going to talk about the backtesting process of markups. Now, there are a few things to consider before we start backtesting. Obviously, markups are the first kind of backtesting that you should do because these are the ones that are going to build your eye for the markets and also show you the best case scenario trades that you should be looking to take. Now, there are a few big considerations before we do get into backtesting. These are things like the timing, your rules, and then how to actually form the markups. Now, one of the big considerations, which I will present to you on the charts in a moment, which a lot of people miss out on or completely forget about or overlook when they're doing backtesting, is the timing of your trades. When people backtest, many times they will just go back into the past price action, find setups, and continue to take them. Now, regardless of the timing, not considering that some of these trades could have been taken at 3 a.m. or, in a session they do not trade. Something that's really important to do when doing markups and other forms of analysis, I'm going to show you how to do it in a moment, is to make sure that you are trading realistic timing. So to do this, you need to think about when are you likely to be trading. If you're from the UK and you trade the London session, a nice early morning trading session, you should make sure that you are marking up the London session to do your backtesting within. If you are a swing trader and you will trade at any point throughout the day, you should still mark up the times between the time you're likely to be awake and active trading and the times that you go to sleep or the times that you will be signing off from your trades in an evening. So potentially mark up an area from say 7 a.m. to 5 p.m. What this means is any trades that happen outside of this range are not going to be trades you take. You only want to be taking the trades that occur between 7 a.m. and 5 p.m., or if you were a London session trader, between 7 a.m. and 1 p.m., or if you're a New York session trader, between 1 p.m. and 5 p.m. Obviously, that's UK time. It may be different for you, but essentially what I'm saying is you need to make sure you are backtesting the exact sessions and the exact timing that you will trade yourself. So what we're going to do now is head over to the chart. We'll talk through this, the realistic timing, building a checklist of rules, and how to actually form the markups that we can then take data from and improve our trading with. So before we even start any testing and any markups, what we need to do is actually prepare a set of rules. You should have done this in the previous chapter, the trading plan. And obviously you'll have your risk rules, your psychology rules, and your technical rules. But what we need specifically for this area of trading, in this area of testing, are the technical rules laid out in a checklist. So let's say, for example, as we just briefly looked over in the previous video, our strategy is going to be following structure. So first of all, we either want to find a break of structure to the upside or to the downside. So step one is going to be find a break of structure. Now, when we've found that break of structure and we know we're trading with the trend, we may look for imbalanced areas into supply zones because that's where we want to find our entries. So step two is going to be identify imbalance. From there, when we found the imbalance, it's going to lead us into a supply zone or a demand zone. And when we trade into that supply and demand zone, that is where we want to look to sell. So the step three is going to be find supply or demand. Once we found that supply and demand, we want to place on a sell limit or wait for confirmation entries. In this example, we'll go with sell limits. So set the sell or buy limit within the supply and demand zone. We want to put our stop loss above or below the zone. Let's say for this example, we're going to target the previous areas of interest, previous imbalanced demand zones or supply zones in previous legs of movement. So this is our technical rule checklist, and this is what we want to go through when we're doing our markups. We want to make sure that every trade we take follows this structure. So what we're first looking for is a break of structure in the market. And obviously, because we have markups, we have hindsight on our side, we can actually look at the best possible opportunities. Now, you're not going to have this benefit of hindsight in the real markets. And that's why it's so important to talk about the next areas of backtesting that we're going to talk about in the next video. But for a good starting point, this is where we want to begin because we can actually see everything and get a real eye for the market and understand the best possible things that we could see and what we need to be looking for when we're actually trading live. So when you have your list of rules, you don't need to write it on the chart. You may want to so you can keep a good view of it, but you've probably got it written down somewhere. So potentially print off your trading plan, keep it on your desk, stick it on the wall, whatever, or just write your list down in a notebook or simply do what I'm doing here. Once you have your rules, the next thing to do is choose a trading pair that you are going to be trading live. We spoke about refining watch lists at the start of the technical chapter, and that theme is going to run in without backtesting. There is no point backtesting, for example, GBP CAD if you never trade GBP CAD. If you're going to be trading, for example, three pairs, GBP USD, GBP AUD, and AUD USD, you can then select these pairs, and these are the only pairs you're going to backtest on because these are the ones you're going to refine to and specialize in, and the only ones you really need to understand and get mastery on. So make sure you're trading on the right pair, and then the next thing to do when we start the markup analysis is choose the date and timing. Now, I like to backtest through a week of data, which means I'm going to go to this little calendar at the bottom of TradingView, click on this, and choose the start date for my backtesting. So in this example, I'm going to choose the start of a week, the 13th of September, and if we go to that, what that's going to do is mark that out on the chart. What we can then do is work out what timing we are going to be trading. So if you are a trader who trades London session, you can plot out the London session by going to the start of the London session, 7 or 8 a.m., and then the end of the London session, 1 p.m. For these examples, we're going to look at a full day of trading. We're going to consider that we potentially are active between the hours of London session and New York session. Obviously, we're not going to be sitting glued to the screen all day, but these are times that we're happy to take a trade and that we can set alerts within. So they're realistic hours for us to trade. So what I'm going to do is actually set out on this day, the 13th of September, the day that I want to start my backtesting from. I'm going to set out the hours of 7 a.m. to 5 p.m. Now, these are hours that I'm likely going to be active to trade. And this is 7 a.m. just before London Open. And then 5 p.m. is going to be the New York close. So if I go to the next day at 7 a.m., there we have 7 a.m. marked on the chart. We can move forward to 5 p.m. once again and mark that on the chart. And we can continue doing this. We now have our full trading week. So what you could then go ahead and do is box out the trading sessions. Obviously, we are only going to be trading within certain sessions, so you need to make sure that you are not actually accidentally putting in this area, because this is the area between sessions. This is the Asia session time that we're not going to be trading. So you can then box out each session that you're going to trade, like so. So at this point, we have Monday, Tuesday, Wednesday, Thursday, and Friday for the week commencing 13th of September. Now, what we can do is analyze at the start of each day, work out if there are any trades there for us, and then move on to the next day. We completely avoid this section because this is the Asia session. As you can see, this is the time that I personally will be asleep. Obviously, if you're elsewhere in the world other than the UK, these hours may be different for you. You may be trading New York and start of Asia session, or just simply New York session. You may not trade London session whatsoever. That's fine. Just make sure you're using the correct hours for you, which for me are going to be between 7 a.m. and 5 p.m. They're the tradable hours. I'm not going to be sitting glued at my screen all day, but I can analyze it at the start of each day and then execute if anything's there. And if not, set alerts or set orders and wait for those trades to trigger. So now we're at the point where we have our list of rules down and we have our chosen traded days and chosen trading hours. What we can then do is begin looking through price action, following these rules that we have marked out here, and see the opportunities that presented themselves. Because we're looking in a markup format, we get to take the best possible opportunities presented by these rules. As previously mentioned, this is going to show you the best places to enter, best places to exit, and overall the best possible opportunities you can take. Now, you shouldn't expect to be taking trades this perfect when you go live or when you go to the live backtesting, but it is going to obviously open your eyes to the market and give you the confidence and give you exactly what it is that you need to look for so that you can take the best possible trades, even though they won't be this perfect 100% of the time when you are trading without hindsight. So the first rule is market structure. We want to look for a break of structure. But obviously, we know we want to follow structure in our trading. So we can see from this point onwards, we are in a downtrend. Okay, we've broken this low here. We are also coming out of further broken lows. So we can look for here a break of structure, which is following the trend. Now I can see just before Monday started, before my trading session started, we had a low point come in here. So this is going to be the swing low for the movement. Now over the first day, there was no tradable opportunity for me with the trend, but this break of structure occurred during the second day. And it occurred towards the start of the second day. Okay, so what this tells us is, right, no trades were ready for me on the Monday, but on the Tuesday here, in this day of price action, coming into the start of the day, I would have seen this nice break of structure in this downtrend. So this is the first step of finding a setup. Now the second rule is identifying imbalance. Well, we can clearly see here that we have some price imbalance. Obviously, it was filled later in the session, but because we are doing markups, this is what we would have seen before it was filled. Okay, so we have this imbalance leading into a supply zone. So the next rule would be to find a supply or demand zone. Now we can also go down and refine. We want to do this as realistic as it would be if we were live trading. So as we've spoken about in the previous chapters, refining your entries, refining your zones, we can go ahead and do that within our markups. So if we refine it to the 30-minute time frame in this example, we can see here then that on Tuesday we had our rules met. Okay, we had first of all a break of structure with the trend which occurred here. Second of all, we found a large imbalance. Third of all, we found and refined a supply zone which goes in line with the trend. This is an imbalanced supply zone, so we want to see the imbalance filled to trade into supply. The fourth rule is to set a sell or buy limit. In this instance, we would have set a sell limit. We can go ahead and put our stop over the high of that supply zone, which follows rule number 5, put our stop loss above or below the zone. And then rule number 6 is to target an imbalanced supply or demand zone. So if we scale back to price, we can look for imbalanced supply or demand zones. Now I can see a couple. We have this one, which is of interest, and we also have this one of interest. So what we can do now is go forward and see where price is likely to go to. Now, because we are looking at markups, we get best possible opportunity. We can see that the first imbalanced demand zone that we marked on has been retested and has been broken through with this breakdown. So because it broke through, we can confidently say, okay, the trend's going to continue. And we have another imbalanced demand zone leading through into this level around 0.73188. So therefore, we can drag the target to there. And we can see that this trade follows all of the rules that we marked out. First of all, we had a break of structure. Second of all, we found this imbalance after the break of structure. Third, we found and refined a supply zone at the top of the imbalance. Fourth, we set our sell limit on the supply zone. Fifth, we put our stop loss above the supply zone. And sixth, we targeted an imbalanced demand zone, which led us down into this level and pulled in a 5.7% profitable setup. And here you have a completed markup. At this point, you would save the markup, put it into your backtesting document. There's going to be a video on that, so don't worry about that right now. I'm just showing you the process. We're going to talk about how to track it all. But here you have a markup which shows your rules in action. Now, sometimes your trading plan may not be perfect, and you may actually find that the rules you've written down don't work. Markups can be useful for this because if your rules are not working and your rules are not bringing you profitable results, you can amend them and you can continually amend them until the setups work and until your rules are working out to be profitable. But we can see the rules are good, we can see that everything's working, and we have it all marked down now. So first of all, we had this bearish break of structure, then we found an imbalance into a supply zone, then we found the supply zone, placed a sell limit in it, then we put a stop loss above the zone and we targeted the imbalance. And as you can see, that set of rules works. So if we can continually replicate this, and we see this happening multiple times, and we see this winning multiple times, we could then gather that this is a working system that we can begin to implement in, first of all, the live backtesting, and second of all, in live markets. So what I'm going to do is show you one more example further in the price. You can see on Wednesday, there were no opportunities that follow our rules, but on Thursday, formed a new set. But let's just neaten this up a bit by removing these captions for now. Obviously, you will have screenshotted and saved this and tracked it, which we will be talking about very soon. And we move over to the Thursday and Friday in price action, where we can see what happened on Wednesday in Asia session and throughout the day was we got a break of structure at this point. Okay, so this was the new swing low, and the structure has actually gone and broken through during Thursday's session. Around the New York session, we had this large impulsive drive down, which broke this structure. So what we can do from there is, there's rule number 1. Rule number 2 is going to be identify imbalance. So going into Friday's session, we would have seen an imbalance leading into this area. Third, we can actually find the supply and demand. We have a nice clear supply zone here. Fourth, we can set a sell limit in that supply or demand zone. So if we go ahead and once again use our sell limit tool to plot that on. Fifth, we put a stop loss above the zone, clearing the high of the zone as we can see here. And number 6, we are looking to target an imbalanced supply or demand zone. So once again, we're going to scale back to previous price, and we can see here, okay, we have a very large imbalanced demand zone. So let's plot that out. Go for this target down here. And as we can see, when we then look at our markup, we did indeed get a large drive down following all our rules and trading into that zone again, this time for a potential 10% win. So as you can see, these rules replicated once again have brought us another brilliant successful markup. And as you can now see, another markup has been laid out. Now, something we can also look at within this setup is the timing. This is something I find important to do. Obviously, some people will be happy to hold trades over the weekend, but for those who are not, or if you're trading with funded accounts with companies that don't allow that, such as FTMO, what you can actually do is be super realistic with your trades and look at, okay, we can see here this trade was taken on a Friday. We can see Friday's market closes at this point. So we know that the market closes on Fridays. So what we can do is actually alter our end of day trading target to 10 p.m. And let's say we're sitting in a profitable position at this point. We're probably going to hold that for as long as we can. Now we can see here at 10 p.m. the market closed there. So we likely would have closed the trade early. So we could actually then close the trade here, count up those profits instead, and make a note of an early close due to the close of market. Like this. And that's going to give us the most realistic outcome for every one of our backtested trades.